Hi guys, my name is Frank Chaparro, senior correspondent at The Block. You might know me as Frankie Scoops or FinTech Frank, but hopefully now you'll get to know me as the host of The Block's new podcast called The Scoop, made especially for decision makers and thrill seekers in the crypto market. Each week, I, along with one of my cohorts here at The Block, will talk with CEOs, innovators, and builders across the crypto market. Blockchain has long been touted as a technological force that would disintermediate Wall Street banks, meaning it could cut out the middlemen and essentially make them obsolete. Maybe that's part of the reason why power players across Wall Street have dismissed Bitcoin as a fraud and blockchain as overhyped. Only time will tell, but one Wall Streeter who does recognize the power of crypto is Mike Bodson, CEO of DTCC, a 5,000-person operation that provides custody and clearing services to big banks like Morgan Stanley and Goldman Sachs. On this episode, my colleague Ryan Todd joined me for a conversation with Bodson at DTCC's headquarters. We talked about what exactly it is that DTCC does, how the company is embracing blockchain technology, and for good measure, we dove into some old war stories. I'd like to take a minute to thank our sponsor, Cash App. Cash App has been the #1 finance app in the App Store for almost 2 years. It was also the first major peer-to-peer payments app to start supporting Bitcoin, and it's still the fastest and easiest way to on-ramp fiat. No more waiting 5 days for your ACH payments to come through. With Cash App, you can buy Bitcoin instantly. It's also a favorite of the Block analyst Steven Zhang. He uses Cash App when he goes to Chipotle and gets money back he saves every time he eats a burrito. That keeps Steven happy, that keeps the Block happy, and that keeps the crypto world informed with the best news and research in the entire market. You can also use it at Lyft, Whole Foods, Chipotle, as I said, Chick-fil-A, Starbucks, and Dunkin' Donuts. Download Cash App today from the App Store or Google Play. I hope you enjoy the episode. So I'm really excited to have this conversation. I'm really excited to have Ryan Todd joining me for this conversation with the CEO of DTCC, Mike Bodson. This isn't the first time we've met. We met, 3 weeks ago?
3 weeks ago.
FIA Boca. Ryan was asking me about Boca on the car ride over. We're in Jersey City, by the way.
Jersey City.
Beautiful Jersey City. We made the venture over here from New York. But yeah, it was at the wine event.
Yeah, we have a little cocktail reception for clients and friends.
And Frank.
Both.
I snuck
and
in.
Frank.
Technically, I don't even know if I was invited. They just saw me there.
Yeah, I think we just saw you walking by and just grabbed you and said, come on in.
Exactly.
We gave you the cheap wine, though.
The Shiraz.
The Shiraz. That was a bad Shiraz.
So let's start. I guess the best place to start is just, what is DTCC? So many people, they recognize big financial players, whether it's an investment bank like Goldman Sachs, which is not too far downtown, or, a brokerage firm. You think of like the Instanets of the world. But behind the scenes of everything, right, is your company. 5,000 people. It's really the pipes and plumbing of Wall Street.
We are the plumbers of Wall Street.
Exactly. Clearing, custody, settlement. Don't forget settlement.
Don't forget settlement. It's a very
So how do you
important.
explain it to, if you have your 14-year-old nephew come up to you
There
and
is
say,
no
Uncle Mike, explain this to me. This makes no sense. Yeah. What's a post-trade?
What's a post-trade? So we're probably the most important financial company that very few people know about. And we are the sole providers of the services you stated, clearing, settlement, custody, for the U.S. cash securities market. So stocks, bonds, mutual bonds, treasuries, mortgage backs across the whole world. And the way the markets work is, even though you may buy a security today, for instance, with a stock, you're not going to actually pay for it for 3 days. So in that time span, there's risk. And we help manage that risk. So on a normal day, we'll do about 100 million transactions will flow through us. We get them from about 50 different trading venues. So the stock exchanges, as well as individual firms and various other markets that are out there. We take those 100 million trades, and we net them down to 3 million. So somebody, Goldman Sachs you mentioned, will be trading in and out of Apple all day long. So instead of doing every trade individually and saying, I got to pay Morgan Stanley for this, I got to receive stock from Citibank or whatever, what we do is net them all down and say, look, Goldman, at the end of the day, you bought 10,000 shares for this price. So this creates incredible efficiencies for the marketplace. The risk part is when you have a Lehman Brothers or we were talking about Knight Capital before, all those trades that have not settled, they're creating credit exposure for the street. So instead of them having to go against individual firms, we step in. We become the central counterparty. So we liquidate all those trades to make sure the markets keep functioning and minimize any credit loss. And we've had over 40 failures of firms in our history, and never once did we have to tap the rest of the street to make up for those losses. So we're just basically, we are the back office of the back office, so to speak. So it sounds mundane, but on a yearly basis, we do about $1.8 quadrillion of processing. So we flip the GDP every 3 days or so. We control $53 trillion worth of securities, which are in a vault, most of which are in electronic form. Some are still actually in paper form, but that's what we do, amongst other businesses.
No, I mean, it's incredibly interesting. And I knew when I saw you down there in Boca, I had to come up to you and shill the podcast because I thought you'd be the perfect guest just because it is this massive Wall Street firm, and a lot of what you guys touch can be automated, can be improved or replaced by blockchain technology. And I remember I think it was you guys had a conference in New York, 2018, your FinTech symposium, and you were on stage and you said something to the effect of, we want to disrupt ourselves before something else or someone else.
I said, if anybody's going to disintermediate us, it's going to be us.
Yeah.
And I think that's the way you kind of have to go into it. But the interesting part you said about blockchain, this company's been around 45 years, and it's owned by the industry, by the way. We're a cooperative in essence that's owned by all the brokers and banks and whatnot that use our services. But when you think about the way back 45 years ago, back then you would have every drunk south of Hudson Street running around every day with satchels with securities and checks going back and forth, delivering securities between firms. It was all paper-based. And they would have to stop trading some day, on Saturdays afternoons and Wednesday afternoon, I think it was.
When Henry had too much to drink.
A few much, and he just kind of wandered off. No, I mean, it was just so much paper, they couldn't keep up with it. So when you think about a bold move, somebody 45 years ago decided, let's take all this paper, stick it in a vault, and put it all on computers. And, that was called dematerialization, and created massive efficiencies. And now the U.S. markets are the most efficient markets in the world because it led the way in that. So, but think about the risk of, can you see going to somebody and saying, I'm going to put it on something called a computer tape? People are going to go, well, what happens if you lose that tape, right? I mean, it's a single point of failure. Single point of failure. We are a single point of failure, but it's the old thing. You put all your eggs in one basket, watch that basket. That's what we do. We watch our basket very closely.
An interesting quote that you had, I think maybe it was in Risk or Waters Technology, where you say, we are going to disappear, or at least aspects of your business are going to disappear in terms of being this, the words exactly that you used were a golden copy of trade records.
Yeah, I mean, the way we work today, we are the golden copy. We stand as the central database for all record keeping for the cash security markets in the United States. The point I was trying to make with that comment is, given the advent of distributed ledger, given the advent of cloud, AI, everything else, the world as we see it today is not going to be the world in 5 years, 10 years, 15 years. I think it's probably going to be closer to 10, 15 because of legacy technology is hard to just completely turn off. But what we do in 15 years, I can't even imagine what it's going to be like because there's so much going on at the same time. And it's not just a particular technology. To me, it's the confluence of all the technologies. It's just going to change the financial markets tremendously. So we can sit back and be dinosaurs and get rolled over and go, become extinct, or we can start reimagining what the future looks like and act not only as the person who provides these services or whatever they may be in the future, but the bridge from today to tomorrow. Mm-hmm. Again, when I throw out those numbers, I mean, that's a lot of processing that's going on right now. To say we're automatically going to switch to a distributed ledger technology in the next 2 years, it's not going to happen. But how do you migrate from today to tomorrow? How do you go from paper securities, which we still, as I said, have $2 trillion worth, to tokenized securities? and what it's a smart contract versus the way the contracts are worked, the paper contracts in essence of today. How do you do that whole migration? And that's, I think, is as critical a role to play in the next 5-10 years as reinventing what the future looks like.
Where do you think it's going to happen? I mean, like we said at the beginning of the conversation, you guys touch settlement, clearing, trading. Where is blockchain technology going to have the biggest impact at this firm, and how are you guys preparing for it?
Look, I think the way Wall Street created its post-trade infrastructure, and post-trade just means that once a trade is executed, you have the whole process of clearing and settlement, the exchange of ownership, the record keeping that has to go on. It's a series of databases, right? We have a golden copy, but every firm has a database. They have a database. They have an operations database. They have a credit database. So you have all these reconciliations that are happening all over the place with the same basic information used for different purposes. And there's no one centralized, agreed upon view of what that data says or what those transactions are, what the positions are, et cetera, et cetera. If you could actually just have one, just think about the amount of work you could take out. And how much instead of doing replication of work over and over and over again, it would just create massive efficiencies. So that's where I kind of see it, going. Now, we have one major project on the way, which is called a Trade Information Warehouse, which is another product, which is a credit default swaps, CDS, over-the-counter product. That
sounds a lot about like from your world, Ryan, banking, Wall Street world.
This was the product that's supposed to
This is way over my head.
Anyway,
way above my pay grade.
It is a product that created a lot of problems during 2008. AIG, for instance, was brought down by their positions, and nobody knew what was out there. So we had this database of these contracts, and they are contracts versus securities, and we were able to give insights to the industry about what the positions were. And specifically Lehman Brothers, there was talks about there was going to be $50 billion, $100 billion, $200 billion, $400 billion worth of payments against Lehman OTCs. And we knew in reality, because we had this database, it was $6 billion. So we announced that, look, we've got most of them. We know exactly what's going on. Stop panicking. It's only $6 billion worth of payments. So we have this trade information warehouse. It is a database. And with DLT becoming more realistic in terms of an application, we are now in the process of rewriting the trade information warehouse into distributed ledger using smart contracts, using cloud, and migrating off a traditional database into DLT. And that's actually a very good usage. I think a lot of times when you see new technologies coming out, everybody's looking about, oh, this is a great new technology, let's apply it everywhere. Life doesn't work that way, right? If you force a solution to a question that doesn't have to be answered, you're just going to waste your time. This actually was a very aligned need and solution set. So we're hoping to launch either later on this year, hopefully by the end of this year. Right now, a lot of the people who are involved in this are involved with Brexit, so their attention is not focused on the conversion. The work has gone very, very well so far, and we hope to, probably be the biggest piece of infrastructure in the financial markets once it gets launched on DLT. So it allowed us to learn. I mean, it's a new programming language. How do smart contracts work? How do governance work? I mean, one of the things, everybody talks about DLT, but who controls the nodes, right? Who has the ability? You're not going to have permissionless systems in the financial markets. We can debate that.
That's a hot take.
It's I will tell you, in my view, somebody thinking that there is no control over who goes in and out of a financial system, what's done in that financial system, I think that's Pollyannish. I think there has to be a central control. Doesn't mean you're trying to exclude innovation or exclude members, but you want to know who's in and who's out. I mean, that's just, in my world, common sense.
I think Templum, which is a security tokens platform, they're building their platform on a permissioned network because they're worried about some of these issues of security. If this thing forks, what happens?
Yeah, I mean, if it forks, if you have some sort of error. Who is the arbiter and who decides what to do? Who decides what smart contracts go on? And if you modify a smart contract, who's in essence the quality control? All those things are the roles we play right now. It'll change how we do that, but somebody has to play that role in the financial markets going forward.
There's a few players that are kind of trying to move over there, like Hashgraph is looking to roll out a public blockchain for enterprises to use. Enterprises like Nomura is on their like global council, and they're trying to build a public blockchain that can be used for enterprises. So is Orbs, which raised $118 million to do so.
No, I think there are definitely applications for public blockchains.
In
There's a lot of data,
just not in finance.
But I think in finance, given you look, it's the old who was it? The famous bank robber said, "Why do you go to the banks? That's where the money is." I mean, why do you go after the financial system? That's where the money is. So if you don't have safeguards, nobody's going to trust the systems. Nobody's going to use the system. So you have to be able to know who are you working with, as well as where are the securities, whatever form they may take. How do I know I'm going to get paid? How do I know there's not fraud involved, et cetera, et cetera?
What do you think?
So yeah, this is a theme I'd like to think about a lot, and it's something interesting I'd like to hear your opinion on. But how do you sift through just the PR, quite frankly, BS promotions that you see across all these different enterprise solutions? Frank's mentioned a couple others, not saying those are legitimate or not. But is this a consideration you look in-house?
Be in my inbox. Thank you.
No, look, there are obviously a lot of opportunities and solutions that are out there. A lot of very bright people working in this space,
and a lot of not so bright people.
And a lot not so bright. I mean,
shysters.
I'm not going to get into. I know nothing about Bitcoin, but when Bitcoin was at 18,000, and you looked at who was on being interviewed on CNBC,
you called it in December 2017. You said, I don't know if it was on TV or in an interview, that you watch out for the hype,
Singapore,
folks.
right? Yeah. Singapore CNBC.
No,
I don't think it was.
I
on
don't think
TV.
it was Singapore, but yeah. It was. Look, it was hype. Whether I can't understand what the valuation process is for Bitcoin.
He called market top.
Yeah, that's the first and only time, and trust me, I didn't short it. So, if I had done the right thing, I wouldn't be here right now. So, but we have a team that looks through all the various technologies from both the technology viewpoint as well as market structure viewpoint. We're not a firm that has the luxury of being able to make a bunch of small bets. I mean, I both envy and feel sorry for some of these firms who are investing in 20 different platforms as they try to figure out both which ones work and then how are they going to interoperate. I mean, I had one lunch with one representative of a big bank, and he was like, look, I just want one set of nodes. I want to have one language. I don't want to have multiple platforms. And then he spent 15 minutes talking about, these $5 million bets he had done all over the place. And I'm like, well, how do you reconcile those two views? And they're like, well, we don't know which one's going to win, so we're going to bet on a whole bunch of them. And I'm like, that's really not a winning strategy in my book. Because you're going to have about 12 that are going to sort of win, but none are going to really win under that paradigm.
That's the thing I think about, like the crypto community, crypto Twitter. They kind of think that folks like Mike and I don't know what bank CEO you were talking about, but he's clearly talking about nodes, and he has an understanding of this technology, and it speaks to the point that Wall Street is definitely paying attention to this market, right? And even folks like Jamie Dimon, right, who went out and for years going out and saying that Bitcoin's a fraud, et cetera. He knows what's going on. Like all of these guys.
Did you read Adam Lewin's letter to Jamie?
No, what do you?
A couple of years ago now.
It came out a couple of years ago. It was. I actually was down. It was at the IAF where Jamie was being interviewed, and he kind of went on his famous diatribe against Bitcoin. And Adam Lewin heard about it, and he was someplace here, and the story he told me was that his plane got delayed. He was going back to San Francisco, and he ended up like 6 hours at the airport, then 6 hours on the plane, bored silly, and he had seen snippets of this. So he wrote a letter to Jamie Dimon explaining Bitcoin and the basis of Bitcoin, et cetera, et cetera. It's very, very well written, but it was kind of funny that, and at the end of the day, I think I saw him in Davos the next year, and he was like, you wouldn't believe who I got a meeting with. I'm meeting Jamie later on. So, Jamie knows his stuff. He may have different views.
You said you don't know anything about Bitcoin, which I don't believe. You definitely know something. How were you first introduced to it? And where do you sit in terms of your opinion on it, as whether it's a store of value or something else?
Well, look, I mean, if you're in financial markets between Bitcoin, blockchain, DLT, et cetera, 2-3 years ago, you couldn't open up the newspaper without getting like smacked in the face. I mean, when we announced the TIW project and other things we were doing in this space, it was like Wall Street. I forgot the exact headline. It's actually in my office about like Wall Street stepping into the Bitcoin space. Like we weren't allowed. How dare you? Philistines all come into this leading edge. Look, again with Bitcoin. the concept of a stored value makes sense. I mean, having a native currency makes a lot of sense, but I think there still has to be what I still can't wrap my head around is the basic price formation. Why is $5,000 right versus $18,000 versus $50? Nobody's been able to explain that other than scarcity, that there's a limited number of Bitcoins that are going to be out there or any other cryptocurrency. But when you hear about airdrops of $125 million equivalent of some coin, you sit there and go, you just created that number out of thin air. And to me, that just devalues all cryptocurrencies because people are going to sit there and say, well, how does that happen? You don't just create currency and say, this is what it's worth. There's got to be a conversion. So we looked at various aspects of cryptocurrency in terms of, is there a custody role we're playing? Obviously, there's a lot of banks who are looking at that space. I think there is interest obviously in cryptocurrencies as an investable asset, but there has to be safeguards. Again, there has to be, people are looking for custody and they're looking for regulatory certainty. Being a regulated fund, you just can't say, well, today I'm going to play in Bitcoin with my client's money and hope I do well. It just doesn't work.
Well, you have some background in thinking about what those types of funds might be thinking because of your role at Morgan Stanley, right? You were head of...
I was head of ops. That was a long time ago. I left there in 2006. I was a much younger man. that was a mere 13 years ago. So crypto was not even on the anywhere in the agenda.
But you can sort of think, if you were in that seat today, and folks, young folks coming to you and saying, "Hey, we need to start investing in this or investing in this for our clients," what would be the impediments that you would identify and
well, I think
shut that kid up?
No, you never shut them up. They're usually brighter. They're a lot brighter than you are. No, look, as I said, we have a group that looks at this, and you have to cut through the hype and try to say, is there a real value proposition that makes sense? And I think, unfortunately, you get the cryptocurrencies, blockchain, tokenized assets, native assets versus just simply tokenizing existing assets. All of a sudden it becomes a big mosh and nobody quite knows what the heck you're talking about, right? So I think you got to start breaking it down and say, okay, DLT as a technology, I think everybody understands the benefits and what it can create for the industry. So the point is, how do you use it? How do you migrate it? How do you not kill it? I mean, I think it's the Gardner called it that we're in the trough of despair, or the trough of
delusionment.
Delusionment. That's what it was. Because it hasn't, saved the world yet, right? And we look at it and say it's a kid. It's if you think about your kid,
it hasn't got me any dates.
It hasn't got you. No. You should. I'm an accountant. You should have seen all the girls flocking after me after college, right? I'm a CPA. Woo. So that I think is just the evolution. I mean, it's a fairly new technology in the lifetime of a technology. When you think about, we still got COBOL, right? And I asked somebody about where would you go to if we get off COBOL. Somebody said Java. I said, well, if COBOL's 40 years old and Java's 30 years old, that seems like not exactly leading edge thinking here. In terms of tokenized assets, that's just, again, almost tied back to the evolution of the financial markets and making things much more efficient. And I'm careful to say, look, ICOs, there are some legitimate ICOs, and obviously, if you look at what happened in that space, when I heard about banana coins and dental coins, you had to wonder whether sanity. I should have called that market top 2. I would have been, rich again.
Short Dentacoin.
So love that coin. I like the banana coin actually better, but anyway. But then you get into, this is an investable asset class, and what are the characteristics that will allow people to invest in it? And again, it's regulatory construct, it's legal constructs. You have to know when you buy it, how does it settle? There's finality. I was at an SEC hearing, Adma actually was at that one also, and somebody who unfortunately was being rather obnoxious, but he was asking a legitimate question: is if you have a problem with a Bitcoin settlement, who do you sue? Who's the contract with? Right. And nobody really can answer the question. And if you look at some of the frauds that have occurred, who do you turn to when, the Canadian fraud where he supposedly died and the laptop sits there untapped? I mean, who's there to protect? So there's just, we just put out a white paper about, what would it take for crypto assets to be acceptable. And these are just basic fundamental building blocks of any financial markets that you can't walk away. It's not to impede progress, but nothing's going to impede progress more than a whole series of frauds, right? If a bunch of people get burnt in a hyped up asset class, be it cryptocurrency or ICOs or anything else, first it'll be, well, SEC, don't impose your will on these marketplaces because you're impeding innovation. And then when the fraud happens, it'll be, well, SEC, where the hell were you? Why didn't you protect the investor, right? So you got to kind of walk your way through that whole process and say, what are the characteristics we need to have in place?
We put out research, I think, recently, Larry Cermak, our head analyst, on just the sheer amount of exchange hacks. I think we're over $1.3 billion since Mt. Gox or before that even.
Jesus.
I mean, and then JP Morgan, maybe it was a year ago, I think, put out research that showed 1/3 of all of these venues have been hacked. Is that the biggest problem?
Yeah, look, it's losing faith in something that could have value, be it blockchain or be it ICOs or be it cryptocurrencies. At the end of the day, you have to trust that when you put your money in it, you're going to get your money out. Look, we create trust. All we do for the financial market. We're in the business. We know,
But Bitcoin's in the business of replacing trust systems.
Yeah, because you don't trust the system. I think people want a system they can trust. I'll turn it on its head, right? Mm-hmm. You want to know you're not if the old poker adage, if you're sitting at a table and you can't figure out who the sucker is, you just did.
Yeah.
Right? So, I think if people feel like the game's going to be rigged against them, they're not going to go into the asset class. But if they feel like there is transparency, there is control, yeah, they'll go in. God, this is sounding really geeky, but it's just the reality of life.
That's chatting.
The game.
Yeah.
I want to walk back to a comment you made earlier just on real value add application you're seeing right now at DTCC is TIW. So in your view, what are the potential post-trade immediate and long-term cost savings? Like how would you size that when you speak and meet with other investors, other executives? In your opinion, what's that real
Hey, look,
number?
we just saw a study by McKinsey. They're doing work for us and talked about the global capital markets are about $600 billion in revenues cost, and they're coming under tremendous fee pressures because there's pushback on the asset managers for the fees they pay. Are you really getting performance for the fees? So you're seeing this whole shift to ETFs and basically non-managed money, which is done cheaper. So it's driving the fees down for the asset managers. They're the ones who pay Wall Street. Our fees are coming down. If you look, they estimated, McKinsey, that if you looked at that $600 billion, if you look at ops and tech combined, it would be about $120 billion of it. So 20% of it. That's on a global basis. U.S. markets, let's say it's about a $65 billion for equity markets. Their belief is that within 5 to 7 years, I think, that 65 is going to go down to $48 billion. So you got this massive pressure on costs, right? And all the Wall Street firms have done the same things over the last few years. They've all tried to modernize, but we all sit on old legacy technology. You've outsourced, you've sent things overseas. You've done all sorts of things to try to drive that cost base down. But at the same time, you've got the pressure of compliance and regulation, which is making your costs go back up. And now you got the arms race with cyber, right? And we spend more and more and more. Cyber is the biggest risk.
How much do you spend on tech overall?
My entire budget for expenses is about $1.4 billion and a little above that. And tech is literally 50%. So it's $700 million is tech, 700 plus.
So you'd say a majority of that is cybersecurity?
No, the majority of that actually is just running the place. But cyber, it's hard to say.
Tech investment.
Yeah, It's hard to say because everything we do is designed for resilience and protection, right? So if I'm putting in a new network, is that cyber or is that just putting in a new network?
Gotcha.
And the answer is yes. It's you're designing everything you do. Everything we do going forward as we redesign, we use blockchain or we look at cloud, we look at AI. A big piece of it is resilience. How do you protect yourself against cyber? So I think, where's the savings going to be? I mean, you've got that bucket of costs I just talked about, and the nirvana is the 50 billion piece, let's say, which is the operations piece, probably a little bit overstated, but you want to drive that down. Will it make your tech costs go down? I'm not sure. I mean, I think tech was going to be forever going up in one way or another. It's just morphing itself into different parts. It used to be traders. Now you got algorithms. Mm-hmm. So it's just the replacement of human beings by technologies. is a pattern of history that's been going on now for 80 years plus. It's not going to suddenly stop.
Now we talk about cost savings. Have you seen any value capture on potentially revenue opportunities, or?
Well, I think it's revenue substitution, right? As I said, I think you're seeing this fee pressure go down. But if somebody comes up with a better mousetrap, a better way of trading, obviously money will go to those who are successful. So I think that's really the game that's going to be played. I just think, look, the financial markets have grown up. I mean, it's terrible for me to say this, given I've grown up in it. As much as we focus on efficiencies, we've always been very silo-driven. We've always been very product-driven, very fragmented in each firm. You know, we and the other firms like ourselves in the financial markets create massive efficiencies, but we only go so far. I mean, in that realm of what I showed you, about $65 billion for the equity capital markets in the U.S., I'm about $1 billion of it. For my estimation, I should be much bigger, because if I'm getting bigger, that means I'm taking all the cost out of the rest of the street, and that's the strategy we try to pursue. But we're relatively a small piece. The rest is just, again, very fragmented, very customized, very specialized. And what blockchain or cloud to a certain extent looks to do is just take out all those pockets of cost that sit across the entirety of the financial markets. It's hard. It's really hard. I mean, as I said, I sit on I'm a proud owner, I say, of 55 million lines of COBOL. We're in the process of replacing that. Don't laugh at COBOL. COBOL is very, it's resilient. It works. We train a lot of kids on COBOL, but we obviously are kind of nearing an end of life situation here that we have to get our heads around. But I have to replace it with a technology and transition to that new technology, as well as the rest of the street, because everybody else is sitting there on COBOL too. I felt good because one of the big banks said, "Oh, we're sitting on Fortran," and I was like, "I don't know why, but that makes you feel better." I don't know.
What about just looking
your
back?
Listeners know what Fortran is, or is this an inside joke?
I think they might.
I think so. You've had a long-ish career.
Thank you for
I
that.
don't want to insult my guests.
No, it's been a while.
And Ryan and I were talking last night about some of the stories that we were thinking about having you share. Your first day was an exciting first day for a CEO.
My first day was the collapse of Knight Capital, and great guys. I mean,
so it's a high frequency trading firm.
It's a high frequency trade. Well, actually, we're market makers, so they're people who gather up trades from, let's say, the retail side of the industry, and then trade them against the street and make a small spread. They don't take big positions or anything. But on August 1st of 2012, they were turning on a new order management system, and unfortunately, it unbeknownst to them, triggered another piece of rogue code that had been sitting out there. And they basically were the counterpart to every trade.
So that's the order management system. That's like what they engage with.
Yeah, that's what they engage with the outside world with, in terms of buying and selling securities. And they are put in this new application for the New York to trade on the New York Stock Exchange, and unfortunately, this rogue piece of code meant they were basically the counterpart to every single trade done on the New York Stock Exchange for the first 15 minutes. So they accumulated a massive position, and it's been written up. They weren't aware of what was going on, and ironically, it was the floor traders on the floor of the stock exchange who spotted it and said, "This is strange. Why is Knight on every side of the transaction?" Called them up, and eventually they pulled the plug on it. But by the time they were through, they had created about an $8 billion gross position, which is way beyond what they normally would do. And they just didn't have the capital to be able to take on that sort of position. So technically, they were in default at that point. Other firms stepped in and ended up buying the position from them and liquidating the position. But again, as I said at the beginning, being the central counterparty, if they failed, in that instance, we would have to liquidate that position on their behalf. Any losses, to protect ourselves, we have something called margin, which is almost like a down payment. We had, because they're market makers, they didn't have a large amount of margin. So if they had losses, we would have had to mutualize it. We give it back to the street, based on a formula. But we worked with them. We worked with the counterparties. We worked with the regulators, and we helped them basically survive the weekend. Over the weekend, they were bought by a firm called Getco, and then Getco eventually was bought by Virtu. Getco came in and
first by KCG. KCG was bought by
KCG was bought by Virtu. But it was a heck of a way to.
So what was the phone call like?
Well, as I said, they just called up and said, "You're about to have a really bad day," and they were absolutely right. But you know what? This is interesting about this firm. We have to deal with crises.
No CEO orientation, just straight into the sharks.
Well, I have been around for 5 years, so I had a little bit of foreknowledge, but I had a great team. What you learn is, as a CEO, you step back and you let your experts handle the situation, and you just try to keep everybody focused and calm. It's what you were saying about the younger people. I've always said that probably the most junior person in the room is going to be the one that has the right answer. So make sure they're able to speak up and talk, and we'll work our way through it. So we work with the regulators, we work with the firm, and as I said, and the people I had were fantastic. And working with them, I mean, one of the nicest things that ever happened to me is about 2 months after night happened, one of their heads of operations sent me a box full of night baseball hats and T-shirts and all sorts of stuff. And he basically said 170 families owe their livelihood to you. And I thought that was really touching. It was like one of those things where you don't really get thanked a lot for doing the right job. And that meant more than somebody else giving me a pat on the back, is that we help people, get through this and not become bankrupt overnight. So that was kind of cool.
Yeah, the firm would have went out of business.
It would have gone out. We could have technically could have put them out of business the first day, but again, we knew the activity they had. We knew what was going on with another firm, and we reached a conclusion working with the regulators, working with our board. Not to get too mundane, but made the decision that the best thing to do was help them get through the rest of the week, get to the weekend, with the thought that it was a good company. It had franchise value.
And that's kind of like why you guys exist, right?
We protect the markets. Yeah, we protect the markets. I mean, again, in the Lehman Brothers, we had, hundreds of billions of dollars of open positions to liquidate. If you simply dumped it onto the marketplace, you'd crush the market. So our role is, how do you deal with a liquidation or bankruptcy like Lehman, but not upset the U.S. cash security markets? And in that case, again, we did it very effectively. We actually, when we sold all the positions, we used a outside advisor, because that expertise we don't have, but we actually ended up making a small net profit that we gave back to the company in the end. Mm-hmm. So,
do you think that was like the most dramatic moment of your time as CEO, or
Night Capital?
I
know the question you could have come up with.
Admittedly, did not know the impact of this story prior to researching more about this, but we have to hear about on the ground Superstorm Sandy.
Yeah. So the vaults.
My favorite YouTube video of all time, I think, was somebody actually said we had the secrets of the 2008 financial collapse in our vaults, and that's why we flooded the building, which we're good, but we're not that good. We didn't create Superstorm
That sounds
Sandy.
like Bitcoin Twitter controversy. Conspiracy.
It's a beautiful thing. Unfortunately, when Superstorm Sandy hit, we were at 55 Water Street. Somebody in our company loved to have our buildings on the water. We're on the water here in Jersey City, and our backup site in Brooklyn is on the water. But basically the equivalent of 5 stories on the ground, we had a massive vault, and it had about 1.5 million pieces of paper, securities, most of which were not negotiable, but they were paper form, worth about $2 trillion. And if you think about putting the New York Times Sunday edition in a washing machine and watching it spin around for a while, that's what it did in a massive room. So the water came down, punched a hole through a wall, probably 8 feet by 6 feet, and flooded the vault. It took us about 3 weeks to get the water out, but same thing happened. When you pump the water out, you're creating another cycle, spin cycle. So we walked into this room, no power, smelled like oil because the oil drums the canisters for the generator were on the ground. It was cold, and there was paper stuck to the ceiling, paper stuck to the walls.
These are securities.
These are securities. Yeah. These are securities. So I won't go into excruciating detail, but we had to get special firms in and armed guards.
Pry them off.
I saw men in hazardous material suits were diving.
Yeah. You down there? Did you have like a hazmat?
Didn't have the helmet on, but no, you were wrapped. You literally were wrapped up in a paper
hair dryer
hazmat.
up with a security.
Yes. somebody asked me, how do you dry them out? I said, you get about 30 miles of clothesline and about 2 million clothespins, and you stick them out. And that's it.
That's not what you did, though, is it?
No. We actually we had a.
Is that like proprietary secrets how you dried these things out?
No.
They froze them, apparently.
Yeah, we froze. Yeah, there you go. You were listening. Yeah, we actually had to freeze them, and nobody picked this up in the press, which was funny.
What about the ink, though? Like, was the ink messed up?
No. This is high quality printing.
Okay,
here,
this isn't like
no, this isn't cheap
lamination.
Yeah, this isn't ballpoint pen on a scratch pad. This was good stuff. But yeah, long story short, we had refrigerator trucks outside, which nobody's asked why are there refrigerator trucks all over Water Street with men with large guns. Freeze the paper. Had to drive them down to a plant down in Dallas, Texas. Actually brought them to our building, then to a plant, freeze dried the water out of it. And then because it was full of water from the river, it was all gunky, we had to send it to a radiation plant. The radiation plant zapped them with gamma rays or something. Actually killed everything. And then you had to repackage them, bring them back by truck. You didn't want to fly them in case the plane crashed. Then you knew you were, out of luck. But drive them back up, and then down on the first floor here, we had like a zero, like one of those rooms where the vacuum was pulling everything out, and people sat there in hazmat suits. You had to tape your wrists and your ankles and everything. So
why would you need hazmat suits?
Well, it's not really hazmat. It's just like the paper covering, So
Ryan feeding me fake news.
It was like an overall. It was like a coverall, very, very fashionable. But everything taped, so you couldn't stick the certificates back inside.
Oh, that's right.
Yeah, and we had watchers of the watchers, and people with cameras on their heads and stuff. And you had to scrape all the gunk off of it, and then we re-inventory. And out of 1 million, I found 1.3 million, 1.5 million piece of paper, we lost all of about 300.
Incredible.
And that was it. It was an incredible.
So what would the value of that have been?
Of if we lost the whole billion?
No, if you just out of those 300.
No, it was nothing. Actually, either we got substitutes or we got indemnifications and stuff like that. We did have something called computer records, which really helped in the end. So yeah, we were technically, if it was a bearer bond, somebody could have presented it. We would have been at loss, but we never had that problem. It was an incredible effort. I mean, the vault looked like an old big old bank vault. The thing that was amazing was had these steel doors, let's say about 7 feet, circular. And the water completely, these were stainless steel doors, the water completely pitted the steel doors. When we got the locksmith to help us open up the doors, he said, don't ever close these again. You'll never get them open again. So then we had to have guards literally standing outside the vault with guns because you couldn't close the vault door. So
and then
somebody said, don't tell the story because everybody will say, well, there's a reason to go electronic. I'm like, yeah, there's a reason to go electronic. Paper is not really safe.
I'd imagine if Superstorm Sandy happened in 2017, you'd see the headlines roll out that blockchain could have prevented
all of this.
Oh yeah, the blockchain community would have had a field day.
Field day, yeah. But
but you guys have made a lot of progress.
Well, that's 2 trillion. That 54. That's out of 54 trillion. Right, so almost, the vast majority of what we have is in electronic form. There's vestiges. There are small companies that still issue paper stock. There's some old certificates. Sometimes you get one certificate that represents everything. But we're moving. There's very little common stock that is in paper form anymore. Probably Walt Disney shares because everybody likes to give their kids Walt Disney shares. But even they stopped issuing stock quite a few years ago. So, yeah, blockchain would have avoided this whole problem. Therefore, the reason. Right, you don't have to worry. I mean, one of the big things with cyber, right, is destruction of data and who's got the golden copy, how do you replicate it, everything else. So one of the things we're obviously looking at is if you put your data on blockchain and everybody's got access to it, if somebody gets hacked, it doesn't matter if it's me or somebody else, and I can replay it, then the system's a hell of a lot safer.
I guess a question I have on that front, we've talked about Knight, we've talked about Sandy, contingencies. So how would DTCC or institutional custodian running a hypothetical distributed ledger for post-trade services, how would they handle a situation like Sandy? That's just a massive question.
No, you know what? I'm going to say blithely, once you get to that point, because it is the distributed ledger, you're no longer worried about the one and only caretaker, custodian disappearing. I mean, the information is going to be spread out everywhere else. So that's why I say when I think about the role we're going to play in the future, we're not going to be that central database per se. We're not going to be the central custodian, but we'll be the caretakers over that distributed ledger. We'll be the ones that, again, work with smart contracts through the nodes, allow people in and out, et cetera, et cetera. But the concept of having a central record keeper, that disappears. That's no longer needed.
And so how many of there are you at that point?
As individuals or as a firm?
Folks working at the firm.
Well, right now we're 4,500 people. Look, is technology good or bad? You tell me. And people will have to learn new skills. People will change into something else. I mean, that happens all the time. Ginny Romney from IBM was on CNBC today. I'm doing a lot of plugs for CNBC somehow. But she was talking about AI is going to change everybody's job, but it's just going to create new jobs, right? You have to believe in the positive impact of technology. But if we're going to be Philistines and stick our heads in the sand and say, please, I don't want to, worry about the changes, we'll get rolled over.
Kind of want to shift gears to custody.
Custody for crypto or?
Correct.
Just custody.
And then we haven't talked about STOs either and security tokens.
We talked about it a little bit.
Yeah, look, I mean, security tokens are coming, or they exist. Obviously, there's a few firms that are out there talking about.
To be sure, DTCC is not custodying any cryptocurrency.
To be sure.
To be sure.
Thinking about it. They're thinking about it.
Yeah, well, we're definitely thinking about it. We are actively thinking about it and determining, again, for both, it's the right thing to do for the marketplace. I wouldn't say we're totally altruistic, but we do believe we have a role to play to protect the marketplace, which is not impeding progress and utilizing whatever technology is best. So, I mean, yeah, securitized tokens are going to be out there, but as I said before, the SEC literally just came out with a paper this morning. I haven't had a chance to read it about ICOs and STOs, and it's going to have a structure around it, and we're going to figure out our role to play in there. And it's not going to happen in 5 years. We're going to be looking at it. We're looking at it right now because you can see the groundswell that people are interested in the process, and we think it's a role we want to play. The last thing we want to see happen is fragmentation in the marketplace. I mean, if I wanted to be a jerk, I could sit here and go, look, let's have all these different blockchains of cash securities all over the industry, all different platforms, and I'll sit in the middle and I'll be the translator between all of them, and I'll just take a toll and help basically feed off the inefficiencies and the friction. That's not the way we think. We really think about what's the best thing for the financial markets. At the end of the day, people lose sight that you want to drive down the cost for the retail investor. I mean, you think about pooled money in the U.S. I sound like I'm on my soapbox, but so much of the pooled money is pension funds and mutual funds, insurance, et cetera, et cetera. That's the little guy on the street. So people are very focused on, if you drive down the cost, you drive the friction out of the system, that means the return to the guy on the street is that much better. Mm-hmm. And so that we take that role seriously. That's if we can help that happen, so much the better for everybody.
Well, that's great. I think that's a good place to end. It was a great conversation. So excited.
So. Thank you. Thanks for coming all the way to beautiful Jersey City.
Oh, it was our pleasure.
Yeah.
And thanks for sharing some.
And you owe me a bad glass of Shiraz.
I do. I'm sure I can find one. I only drink bad wine, really.
There you go.
So.
Thank you very much.
Thank you very much.
Thanks, Michael.
We'd like to take a minute to thank our sponsor, Cash App. Cash App has been the #1 in finance on the App Store for almost 2 years. It was the first major peer-to-peer payments app to support Bitcoin, and it's still the fastest and easiest way to on-ramp fiat. No more waiting 5 days for your ACH transfer to come through. With Cash App, you can buy Bitcoin instantly. When you're ready to take full ownership of your private keys, just use Cash App to scan an external wallet's QR code. It's really that simple. Cash App also comes with standard banking features like direct deposits and others your bank would never even consider, like Cash Card, a customizable debit card that lets you instantly save every time you use it at Lyft, Whole Foods, Chipotle, Chick-fil-A, Starbucks, Dunkin', local coffee shops, and a whole lot more. Download Cash App today from the App Store or Google Play, and thanks for listening.